dude, fix my trade. And a couple weeks back, Cohen Carter made a bullish bet on Facebook. The stock hasn't cooperated, but they haven't lost face yet, and here's why. On options action, just because we risk less doesn't always mean we make more. And sadly, that's just what happened with Cohen Carter's bullish bet on Facebook. Carter liked the look of Facebook's chart.
We would get involved, play for a catch-up move in Facebook.
Well, if Carter likes it, Mike thought, I'm in too. But just buying the stock, 100 shares would set him back $2,800. So to spend less, Mike instead bought the May 29 strike call for $1.50. Now to make money, Mike needs Facebook shares to rise above that strike price by more than what he spent on that call, or above $30.50 by May expiration. But wait, you're paying $150 just to get into Facebook?
Are you kidding?
Mike, lean in and listen to Sheryl Sandberg. Let's do this for less.
Selling the 32 call for another 60 cents.
That's the spirit. So to spend less, Mike then sold the May 32 strike call for 60 cents. And now between the $1.50 he spent on that lower strike call and the 60 cents he collected by selling that higher strike call, Mike has reduced the total cost of his trade to 90 cents. And now to make money, Mike just needs Facebook stock to rise above that $29 strike price by more than the 90 cents, or above $29.90 by May expiration. But there is a trade-off, and by selling that call, Mike has capped his profits to the difference between the strike of the call that he bought and the strike of the call that he sold. But he's not done yet, folks, because paying 90 cents to put on the trade is still too rich for Mike's blood. So to spend even less, Mike then sold the May 25 strike put for 90 cents. Now between the $1.50 he spent buying the call, the 60 cents he collected by selling that other call, and the 90 cents he collected by selling that put, Mike has found a way to put this trade on for free. Yeah! That means Mike now sees profits if Facebook ticks even a penny above that 29 strike call that he bought.
Oh, that's cool.
It sure is, Cheryl. But remember that there's a trade-off. And because he sold that put, Mike is now obligated to buy Facebook stock for $25, even if it falls well below that level. And after initially falling 3%, Facebook shares are flat since the time of the trade, meaning this trade is neither a winner or loser. But that hasn't stopped Carter and Co. from defriending each other on Facebook or trashing one another on Twitter. But between all the acrimony, guys, let's not forget about the trade. Because options action fans only have one question: how will these two friends fix their trade? Before we answer that question, you might be asking, why mess with all this call spread, risk reversal business? Why not simply buy the call? The answer is found in playing a little options versus options. Had Mike simply bought the 29 strike call, he'd be looking at a loss of about 26%. But Mike's options trade costs nothing to put on and can basically be taken off for no loss. Why is that? Magic, you say? No, it's actually just options, and here's why. You see, the value of the options that Mike sold have decreased faster than the value of the call that he bought. So with all that said, what is the next move for Facebook? Carter got us in, so we turn back to Carter. Carter, what do you see?
Yeah, we like it here. Actually acted well today in a very red tape, and stock's unchanged since we started, and we would stay the course.
Mike, what's your next move here?
Yeah, I think we stick with this as well. I mean, we do have those two options. They're decaying to offset it. You know, even if we have the stock put to us, it's still at a pretty good discount, about $2.40 from where the stock is now, or just under 10%. So I think this is one of the places where I actually don't feel uncomfortable maintaining a long position.
And Dan, just quickly, you still don't like Facebook.
I do not like it. I just don't get their products. I mean, to me, I actually think, and I've said this before, I think we're going to be talking about this company the way we talk about MySpace in about 5 years or so. And I was not impressed with that announcement yesterday at home. I think they have to really come up with some ways that they're going to show, you know, increased user engagement, and they're not getting it. So to me, I want to fade this rally. I'm actually long some April puts right now in the name, and I want to fade it.
All right, coming up next.
You know, but one.
Oh, go quickly,
well,
Mike.
I was just going to say very quickly. I'm just going to say, look, this is a company that does have growing revenues. It is and it is a stock that seems to have found a little bit of support here.
All right, now for real, coming up. Is Tesla ready to stall? The stock has been on fire this year, but there's some controversy on this desk as to whether the rally can last. It's a no-holds-barred battle for your money. When we come right back.